Imagine you're walking down the street, and suddenly, everything gets more expensive. Gas, groceries, even that cup of coffee you love. Now, what if I told you that the reason behind all this might be hidden in something you rarely think about: interest rates? Today, we're diving deep into how interest rate hikes can shake up the market and your wallet, and why understanding this is more important than ever in 2025. Hey everyone, welcome back to SmartCoin Chronicles, where we break down the most important financial topics so you can make smarter decisions in the stock market. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss out on our top stock insights and economic breakdowns. Today, we're going to answer a crucial question. How do interest rate hikes really impact the market? Let's start with the basics. What are interest rates? Before we get into the impact, let's first understand what interest rates are. In simple terms, interest rates are the cost of borrowing money. When you take out a loan or a mortgage, the interest rate is the amount you pay extra on top of what you borrowed. But the real question is, who sets these rates? Well, it's usually the central bank of your country in the US. It's the Federal Reserve. When the Federal Reserve raises interest rates, borrowing money becomes more expensive. And when borrowing costs rise, it affects everything from home loans to car loans to business financing. But how does that impact the stock market? Let's dive in. How interest rate hikes impact the stock market. 1. Slower economic growth equals lower stock prices. When interest rates rise, the cost of borrowing increases, and businesses may struggle to get loans for expansion or operations. If companies can't borrow cheaply, they may cut back on hiring, reduce production, or even delay major projects. This leads to slower economic growth, and slower growth typically means lower stock prices. 2. Higher borrowing costs for consumers. Interest rate hikes don't just affect businesses, they also hit consumers. If you're planning to buy a house, car, or even use a credit card, the higher interest rates could make everything more expensive. When people spend less because of higher costs, it impacts the companies they shop from, and ultimately, the stock market takes a hit. 3. Impact on bonds versus stocks. Another important thing to understand is how interest rate hikes affect bonds and stocks differently. When interest rates rise, bonds become more attractive because they offer a higher return. However, stocks may become less attractive because higher borrowing costs can eat into company profits. As investors flock to bonds, stocks may suffer in the short term. 4. Sector-specific effects. Different sectors react differently to interest rate hikes. For example, financial companies like banks may benefit because they earn more from the difference between the rates at which they borrow and lend. On the other hand, tech stocks, which rely on cheap capital for growth, might struggle when rates rise. The long-term effects. In the long run, interest rate hikes can be a signal that the economy is overheating, meaning inflation is rising too fast. To control inflation, central banks hike rates to cool things down. While this might hurt in the short term, controlling inflation helps stabilize the economy and, eventually, the stock market. On the flip side, when interest rates start to fall, borrowing becomes cheaper again, stimulating growth and, often, sending stock prices higher. So, the cycle of rate hikes and cuts has a huge impact on the markets in the long run. Why you should care? So, why should you care about interest rates? If you're an investor, understanding interest rate hikes can help you make better decisions when it comes to buying and selling stocks. If you're planning on buying a house, car, or any big-ticket items, knowing when rates are rising or falling can save you thousands of dollars over time. But here's the key takeaway. While it may seem complex, interest rates and their impact on the market are something we can track and predict. And the better you understand this, the better you'll be at managing your investments and finances. Alright, that's a wrap on today's topic. I hope you now have a clearer understanding of how interest rate hikes can impact both the economy and the stock market. Remember, These decisions aren't just numbers on a page, they affect real-world buying power, corporate profits, and the overall economic health of a country. If you found this video helpful, hit that thumbs up button and leave a comment down below with any questions you might have. Don't forget to subscribe and share this video with friends or family who might need this info. Thanks for tuning into SmartCoin Chronicles. Until next time, keep learning, keep investing, and stay smart.